TCS on luxury goods. With effect from 22nd April 2025, a TCS of 1% will be levied on luxury goods having a value of 10 lakh rupees or more. Now, this is not merely a tax collection strategy, it has some very serious ramifications on those who indulge in tax manipulations. I'll show you how it's done in this video. Now, the list of 10 goods on which TCS will apply at the rate of 1% is as follows: wristwatch, art, which includes paintings, sculptures, or antiques, collectibles such as coins, stamps, yacht, rowing boat, canoe, helicopter, luxury sunglasses, luxury handbags or purses, shoes, sportswear and equipment like golf sets or ski wear, home theater systems, and horse for horse racing in race clubs or for polo. Now let's take an example to understand why this TCS is important. Rahul is an entrepreneur who runs a 100 crore IT company. He buys a 12 lakh rupees worth of Rolex watch. Now this Rolex watch is ideally his personal expense, but instead of paying for the watch from his personal bank account, he uses the company's account to pay for the watch. But you'll say, sir, since the company belongs to Rahul, how does it matter whether he pays it from his personal account or from the company's account? Well, there's a big difference. There are several stakeholders in a company, like lenders, financiers, VCs, who have contributed capital and loans to this company for the purpose of utilizing it for IT business. But those funds have rather been diverted by Mr. Rahul to buy a luxury watch for himself. This is an illegal activity. Now what will happen is, once Rahul gets the billing done in the name of the company, the seller of the watch will levy TCS at the rate of 1% on this 12 lakhs, which is 12k. And this transaction will then get reported in the AIS and 26AS of this company. Not only will this non-business expense come to the notice of the income tax department, but even the stat auditors, and they'll be able to catch hold of Mr. Rahul. Another important aspect is to curtail benami transactions. Now let's say Rahul's IT company transfers this 12 lakh rupees to Rahul's driver's bank account in the name of salary. And as you know, in financial year 25-26, there is no TDS if total income does not exceed 12 lakh rupees. This salary gets camouflaged in the salary paid to 1,000 employees of this company. Now from the driver's bank account, Rahul buys the watch. So Rahul is not only able to save his personal income, but is also able to arrange for an expense for the company, which is a win-win situation for him, but not any longer. Now what will happen is, the watch seller will deduct TCS at the rate of 1% on this driver. When this information reaches the income tax department, they will compare the driver's salary with the expense which is now appearing in his form AIS and 26AS. They will simply send a query to this driver to ask him how he was able to afford this 12 lakh rupee watch from his 12 lakh rupee salary. And ultimately, the driver will reveal this benami transaction. You know, this is how tax manipulations happen in the real world. Remember how the promoter of Gensol and Blue Cap diverted 26 lakhs to buy a golf set? This TCS provision is going to curtail such transactions. Do hit the like button if you found this video interesting, and please don't forget to subscribe to our channel. See you talkies.